I think we can start the next session now. So Vandana, thank you. Thank you for joining us. How many of you know Vandana? I have to introduce you. Your firm is very well known. She is a partner at private equity practice at Bain & Company, Inc., right?
That's right.
And let me read out a little bit about yourself.
Sure.
So people have a good idea about what you've been doing. But I know, I was last night reading memo to CEOs, on the private equity. You got very nice memos written, and they are very, very interesting. So if some of you have not seen them, you must see those memos coming. And so Varsha, how long you been with Bain now?
Sure, I can.
You want to say something about yourself?
Sure, I'm happy to introduce
Oh, great.
myself.
That would be fine. And also continue your presentation.
Sure. To lower this for myself here. Thank you. I was very pleased to be asked to join this session. My name is Vandana Radhakrishnan. I'm a partner here at Bain & Company in our New York office. I had the great pleasure about 3-4 years ago of spending a couple of years in India working in our private equity practice in both Mumbai and in Delhi. So I've had the opportunity to see both private equity markets in action. And I have to say, Nishit, listening to you and following the Indian private equity market over the last, really the last 18 months, it is a pretty extraordinary story of growth and underlying optimism in the market. So there have been ups and downs over the last 6 years, but I think the overall perspectives on the market are actually quite positive. What I thought I'd spend a little bit of time doing today, Nishit alluded to our global private equity report. We issue a report every year globally, and then we do regional reports in each market talking about the health of the market, both from the standpoint of deal activity as well as fundraising. And so where does India stack up in all of that? I thought that might be an interesting discussion for this group. So to share some high-level observations, very difficult to read, I realize, for a room this large, but I'll talk through it. I think as we sort of step back and look at the Indian market, there are really four primary observations that come out, and we'll talk about these in some detail in this period of time. The first is, as we compare 2013 to 2014, the private equity market in India has actually been quite robust. If you look at global private equity deal activity, it's been pretty light at about 2%. That's not because people aren't working on deals. In fact, I can tell you from having spent the last 12 months in this market, people are working very hard. But in the US and Europe, it's been very difficult to consummate deals, in part because of valuation expectations, in part because of processes that are overly complex. And so deal activity has been a little bit above flat. If we look at what's happened in India in that same period, deal activity was up by 35%, which is a really material number. If we then step back and talk to folks in the industry and get their perspectives on what they think the forward-looking view is, it's actually very, very positive. People are optimistic both about the deals they can get done and the capital they can raise. If we dig in a little bit and look to see what kind of deals were done, what is happening in this market, by and large, consumer deals have dominated in terms of deal activity, both in deal value and in deal volume. This is driven by Snapdeal and Flipkart, the two biggest deals in the market. But consumer technology, the rise of the middle class, it is a very fundamental underlying trend that has really driven growth in private equity in the market. If you look at the type of deals that are done, we're seeing growth both in deal size and in deal volume. So one could look at the Indian market and say, well, you had a couple of really big deals that really drove the numbers and are falsely inflating it. But that's actually not the case. Both activity and volume up. The makeup of those deals looks similar to what they have in the past, but perhaps even more accentuated. Higher level of growth deals, higher level of minority investments. Those are sort of long-run trends in the Indian private equity market, but we see those trends accelerating in the last year. When we talk to our clients, and many of you who work in the industry, the number one concern we hear from people is that we need to drive value in our portfolio. And we hear that in India, we hear that elsewhere in Asia, and we absolutely hear that in the US and in Europe. The challenges in India are unique, though. Because the transactions are largely a minority, and in many cases sub 25%, driving value in the portfolio is a true challenge. So structurally, we see a lot of funds adding capacity in terms of team members focused on the portfolio. We see funds spending more time creating value creation plans. But I think if we had candid conversations with most of our clients, they would tell us this is really hard. And we are in the, to use a US analogy, we're in the first inning. I have to say my cricket terminology is not so great, so I don't know what the equivalent is. But we are in the early days of really figuring out how to drive value in the portfolio. So I think that continues to be an important trend. And then finally, we see quite a bit of growth in exits as well. So this is not, this is a market that is showing signs of liquidity, ability to get assets liquid, which, as we'll talk about, is what's driving some of the LP interest in the market, is that there's real liquidity events to drive interest. So those are some of the highlights, but I'll walk through some of the details. So some of this, many of you, especially if you've seen our report, will be familiar with, but it's a pretty striking trend if you take a 10-year view on what's happened in the private equity markets. You'll see a very, the definition of a bubble, I think, in 06 and 07. But if you sort of say that was, falsely inflated and you go back to the new normal, and you look at what 2014 looked like, it really was, sort of an average to below average picture if you look at the market in aggregate. But it's pretty dramatic in this context to see what's happening in Asia. If you then dive in and look at Asia more specifically and sort of break that out by country, it becomes pretty apparent that this is a Korea, India, and China story. And Japan, not as much. India has had 2 consecutive periods of pretty strong growth when it comes to deal value, deals done. China is recovered dramatically from a pretty sharp decline in the prior period. And Korea has been a very, very strong market as well. So India is amongst a strong peer group here in Asia, particularly relative to the more mature private equity markets in the US and in Europe. Some of this, Nishit and other folks have alluded to, some of what's underlying this are really very strong macroeconomic indicators in the market. GDP growth of 7.5%. Since mid-July of 2014, a pretty apparent, visually apparent change in the middle panel here on what's happening with inflation. And then finally, the stock market yields being as attractive as they are, I think obviously changes in government and everything else have established a pretty strong foundation of macroeconomic strength and stability driving the market. That's reflected here in FDI inflows, 29 billion with a 28% increase in private equity deals, as you can see here with the piece in the red. If you look at some of the big deals done on the right-hand side, I mean, it is a pretty remarkable story, I can tell you, from even the 5 years ago or so that I was working in the Indian market, the way that this has evolved. Flipkart and Snapdeal being as significant as they are, and we'll spend more time talking about that, is a pretty big sign of the market. But it isn't a single end market focused picture. If you look on the right-hand side and you look at some of the big deals, Unitech, Kotak Mahindra, Shriram Capital, you see financial services, you see infrastructure, you see traditional BPO, which has historically been a sizable part of the market. So you also see diversity in terms of the types of deals done. Fundraising. One of the things that's very interesting about the market, if you look here on the first panel, in the number of funds that are either in India currently or expect to be in India or opened in India in 2014, it's a huge number. 220 new investment vehicles in 2014. That is, I mean, again, I'm looking at this as the perspective of somebody who spends now a lot of time in the US. That's an extraordinary number. 75% of those funds report that they're looking to do a fundraise in the next 24 months. And 75% of them also believe that fundraising is going to be a lot easier this time around than in the prior cycle. That, when you put that together, to me says that there's just there will be a lot of dry powder in the market, right? The macroeconomic stability, the liquidity events that have happened in the market, combined with the number of new funds and the number of existing funds expecting to fundraise, it's a very robust market. There's going to be a lot of capital that needs to get put to work. there is a lot of optimism in the market as well, which is reflected in some part by the fact that these funds are opening their doors in the market. But if you ask people, what is your expectation for growth in terms of the number of investments, and how do we expect that to look in 1 to 3 years, people are estimating, and again, people are not always the best prognosticators, but it gives you a sense at least of investor sentiment. People are expecting extraordinary growth in the 25% plus range, which again speaks to the optimism in the market. If you ask people how much of your fund do you aim to invest in India, again, that number is high and increasing. To shift gears for a second and talk about the deals that were done in the market, consumer technology, as I mentioned, real estate, and financial services contribute to about 50% of deal activity. And it's notable, again, we've alluded several times to consumer technology is kind of how we're broadly characterizing it, but if you really get down to it, it's about e-commerce and what do we think is going to happen with e-commerce in India. That really is a pretty important part of the story. So what do we think about that? And I'll share some high-level perspectives on what we think about that end market in India. And we obviously as a firm spend a lot of time on this. I personally spend a lot of my time on e-commerce globally. And if you look at what's happening in India, the numbers, the sheer scale of the opportunity is amazing. So 45% of people, so 610 million people online, just in absolute terms, even if you're assuming low conversion rates and all of that, that is the base from which you're starting is substantial. The demographics are favorable. You have a younger income group that's working, that is more inclined to buy online, and there's a lot of headroom for growth. I think as we sort of step back and say, as investors looking at this market, and as you think about deal activity in the next 12, 18, 24 and months and beyond, what do we see as some of the challenges? The first, which is not on this page, I think is the question of whether the underlying infrastructure in India can support the supply chains required for e-commerce, because it takes a toll on the supply chain. In order to make the economics work, you need a certain level of infrastructure. So that's always going to be an outstanding question. Secondly, there's a question around uncertain returns. I will say that is not just a story in India. Many of the biggest names, including Amazon, have focused a lot more on growth than traditional margins, and so there are a lot of questions on what are the returns and what is the horizon for those returns. The valuations or expectations are extraordinary. I don't think that has stopped anyone from being able to participate or wanting to participate in some of these deals, but obviously it makes it quite challenging to participate. And the industry is nascent, so it's not clear who the real end customer is. It's not clear on what the winning technologies and the winning platforms and the winning service offerings are. So really, again, to go back to the baseball analogy, it really is in the early innings as well. And so as you're trying to invest behind consumer technology as a private equity fund and look at deal flow in that space going forward, there are challenges. But I would say personally, just looking at the scale of the opportunity and the amount of runway there is for growth, I would expect, and I think we as a firm would expect that to fuel a lot of growth going forward. Deal sizes. I think this is an interesting trend. As I mentioned earlier, what we're seeing on deal size is that the average deal size for private equity has gone up by about 28%. Now that is being inflated to some extent by Flipkart and Snapdeal and so forth. But you do see a pretty substantial increase. And people are, I would say 80% of investment professionals we have spoken to would expect that to either be flat or increasing, about half expected to increase, and many of those people expect it to increase substantially. That said, it's a little counter to what is happening in terms of the type of deals, which is the deal profile is increasingly looking to be growth and early stage focus. Now, part of that is because it's much harder to get deals done as you get to late stage because you have the public markets as an option. Valuation expectations with promoters once you get to that late stage, also very difficult to get deals done. But we are seeing it as a growth and early stage market. And as we ask people, how do you expect that to change going forward? People see that trend accelerating with even more early stage investment going forward. I had said up front one of the challenges with the Indian market, one of the challenges, and you could argue opportunities as well, is that the majority of the deals that are done are minority deals. And so 70% or 25% stake or less, which is pretty, that's kind of creeped down over time, but that's a pretty big number. And if you sort of think about what I had said earlier about the fact that most of these deals are growth deals, early stage deals, and that's what people see accelerating, it's no surprise because it's starting to look a little bit more like venture that you see more minority deals in the future, and that's what people are expecting in the market. That actually pretty substantially complicates what investors' sort of objective is in the market, which is investors want to take a more activist role. They want to focus on the portfolio. They want to drive value. And they're building value creation plans. So 80% of funds tell us that they have a value creation plan for their portfolio companies at close, heavily built around the private equity investment thesis, the deal thesis. But they have that plan, and they present that plan to management post-close. The problem is that less than 50% would say that they've been able to achieve it, and in reality, that number is probably even lower. And so people are trying to figure out how to solve that problem. So you'll see on the right-hand side, the number of people that are on GPs' operating teams, that's increasing, and people expect that to increase even further. There's a broader structural question of, you can have more people on your operating team, but if your stake is a minority stake, how do you really drive value? How do you deliver something differentiating? And that's going to become important both post-acquisition on a deal, but frankly, in an environment where there's a lot of dry powder chasing a set number of deals, it's going to become increasingly important to win in processes. So, certainly in the U.S. market, it's a key differentiator for funds, particularly funds that target growth and early stage, is to be able to describe to the company, this is how we will add value. So other than our capital, here's how we'll help you. And so figuring out how to make that work in the context of the Indian market, we think will be a pretty critical priority for funds going forward. The good news is that the number of exits has increased. And so again, to the earlier point about why is capital coming to the market, if you look at the total value of exits, that's climbed pretty steadily over the last 3 to 4 years. And again, the market is optimistic. People expect that to look even better. So both the number of exits and the quality of exits are expected to be strong. And that really is then the flywheel that you need to sort of build the private equity market or to grow the private equity market in India. It's a combination of capital coming to the market and demonstrating liquidity. So if that optimism is warranted, the economic climate continues, and the number of exits and quality of exits continues on the ramp that it is, I think it tells a very positive story about the future. Exits are going to be driven by a number of factors, so IPO market, turnaround, macroeconomic environment, and the pressure to exit and return to LP. So those things will drive the exit market, but there is a very clear and multi-year trajectory in terms of where that's going. So I think to some extent that optimism is warranted. I'll stop here and just share some general, as we look at the market, at the clients that we serve, and we think about what's going to be important to them to be successful going forward. As a general partner, I think, we continue to believe, and I think people in the market would say this has been true in the past, a strong team is going to be essential to win in the competitive environment. There's a lot more capital out there trying to chase deals. There are a lot of people out there fundraising as well, so the fundraising market is competitive. Now the total pool of dollars available is also significant, and so there's upside potential, but there's competition, and so those teams will be important. The operational teams will become increasingly important, so finding that talent and building those operational capabilities we think will be critical. For limited partners, look, it is a market where there are a ton of opportunities, and so scrutiny and diligence become very, very important, right? Because how much growth can you underwrite? Where is consumer technology going? What is our best view based on what we know today? What could happen to change that view? Really wrapping your head around that to figure out which funds to invest in and which funds are doing the good deals. I think that's going to be important. Entrepreneurs, as I said earlier, have historically thought about private equity in this market as a source of funds, and entrepreneurs need to evolve their thinking to think about private equity as a source of value above and beyond the capital that they bring to the table. And so asking the questions and holding GPs' feet to the fire about what they're going to deliver in a transaction, especially on a minority basis, I think is important. And then finally, policymakers. A big part of this story, what's driven the growth, what's driving the optimism, is a sense that there is reform, that there is stability in the economic markets, that there is a pro-business climate that's here to stay. So I think making good on those promises, making sure that they're sustainable, that they're visible, will also be important. But look, as we look at this market, as I said earlier, we do the private equity report in multiple markets, and we spend time looking at it, kind of opening the aperture and looking at it on a global basis. And I think we would all say, all of my partners who work in this practice, that this is that India is a terrific market with incredible momentum, a lot of interest, as evidenced by the number of people in this room. And I think, certainly we are all waiting with bated breath to see if all of the optimism is warranted. But I think we ourselves are optimistic as well. Thank you very much.
Thank you, Vandana. You want to stand there and answer questions?
Sure. Happy to.
So, is it working? Hello?
I can also sit there, whichever.
Okay. No, I think that should
Yeah?
be working.
Okay.
I'm anyway a little loud. So, anyone has any question at this point in time? Vandana, you made a great presentation. I know some of the things we have been facing every morning is the nature where we see a lot of frauds and stuff like that in India, which is unusual, and it's not usual for private equity people to get into litigation. And this is something we have seen quite frequently in India. And how do you see that? You must have heard some stories in India and
in terms of there are a couple of deals I have been involved with where I guess this goes back to the broader point, which is why diligence is so important in a market that's in flux like India. So that diligence is the business diligence, but it's also the legal diligence. So there have been a few instances where things like that have cropped up. I'm not at liberty to speak about those, but I would concur with your view that that is the importance of diligence is very high.
How do you address that? Because of course, in legal due diligence, everything doesn't come out. When somebody is doing something surreptitiously or otherwise, doesn't really figure out. But you've been in the business of due diligence, I would call. I read that you do more strategic due diligence.
Yeah.
So how do you smell a company?
Yeah. Well, I think these are things that you would check for in India or elsewhere.
Right.
You might find it turning out not the way you'd like in India more often than other places. But in terms of business diligence, for example, you'd look at channel stuffing is the term that we would use in the U.S. So right before a sale, are they prettying up the pig, putting lipstick on the pig? There are a million different analogies, but essentially, are they stuffing the channel to show sort of a false spike in sales? But really, when you dig into it, you find that it's just pull forward demand, and that demand's not going to be there in the subsequent year. That's a common check that you need to do, and it's a lot more transparent. It's a lot easier to figure out if that's happening when you're looking at a business in the U.S., and a lot more digging that you have to do in other markets where things aren't as transparent. I think you find, when you're looking at businesses, and I spend a lot of time in the consumer retail world, so a lot of my analogies or examples are in the consumer retail world, but you'll see, when you're looking at growth either in a product or growth in a retail business, where it's very, very hard to separate what is organic, what is comparable sales versus new products, new stores, new locations, new something that's not sustainable. So trying to pull that apart in the business diligence tends to be an important issue as well.
Yeah, can you, you have to tell your name and introduce in brief so we know who's asking question.
Yes, Miriam Gonzalez Luján Binar Corp. Given the fact that India is an incipient, nation and emerging market, the rates of growth are great, but from the experience of their deals that you are analyzing and working right now, what kind of exit or returns can a foreign investor expect compared to the U.S. or any other developing market?
That's a difficult question to answer because some of it is about the return. You could invest in the U.S. in certain sectors and also get very high returns, or in Europe. So I don't think I could answer the question on what are the returns you would expect in an emerging market or elsewhere. I mean, some of it is risk profile. A lot of it is the end market in which you invest. If you have the appetite for risk, and you invest in things like Flipkart or their equivalents in different, in Brazil or in other emerging markets, there's a certain return profile associated with that. So I don't know if I can answer it at that.
And the timing, what are the timing that you see?
Well, in India, we're seeing the exit market ramp up, and so so I think the opportunity to get returns faster, is in part driven by the fact that the exit market is more robust. So the time horizons aren't as long. I mean, in the developed markets, you'd think about a 3 to 5 year exit horizon. I think that's not unreasonable in India if things continue at pace.
Your introduction.
My name is Haresh Shet. Over the past 10 years, I have seen the returns in Indian investments have been diminished as a result of weakening of the rupee. Have your firm done any research or your views on the Indian rupee?
We don't tend to sort of forecast currency. Actually, that's not something that we typically do, so I don't want to overreach on that point. I'd also say I have worked in the Indian market, and I still do on occasion, but I also don't. I live here. I work in this market, so that may be stretching what I can answer.
But you think you will have some perspective as to how Indian economy is going to do and whether rupee will be stable or not stable? I know I don't hold you to that.
Yeah.
You won't give written opinion, I know. But,
I would say I'm not the right
what's your
person to
take?
answer that
How many of you are optimistic about India, let us say, before we go to Indian rupee? Oh, great. And how many of you think Indian rupee will stay reasonably stable? What's the rate today? Anybody knows? How much? 64? Would it remain around 65, 63? Or it will depreciate? Your guess is as anybody else's, but don't. How many of you think it will depreciate?
It will depend on the euro. It will depend on the euro because you're looking at the US dollar to rupees, whereas you have to look at the basket because euro could weaken if something happens in Greece, and that will increase the value of dollar.
You know what Greece is doing now?
Yeah, that's what I'm saying. So it is difficult.
They don't like to hold euro. They don't like to hold Greek currency, so they are going for bitcoins.
Yeah. So what happens?
And they are accepting, actually, Bitcoin prices went up from 200 to 260 dollars in no time. Cyprus is accepting Bitcoins for university education fees. So how many of you know and think about Bitcoins, where it is going to go? Is it going to be more popular? How many of you think? How many of you understand?
I don't know if you can hear me. Actually, I think there will be
Go ahead. Sorry
role.
for interruption. Your name you did not tell me.
My name is Sukumaran.
Yeah.
And I think Bitcoin will have a structural security role more than as a medium of exchange because it's a very good technology to secure against what do you call?
Blockchains and
Yes, exactly. So that will give it more respectability going forward.
Absolutely.
Then it will settle at a place for the medium of exchange. I think the first role it has to play is a structural one. That's my opinion.
Any other question? One is very expensive if you want to consult us. So anybody has any more questions, comment or anything like that? So this is not one-way traffic, you know, it's not, I think we are just having a square table, we are sitting here so we can all see you, but doesn't mean that we have more knowledge than what you have. Yeah. Yeah. Name, please.
Hi, Tom Highland. I run Aspada, which is a Series A venture capital fund based in Bangalore, and a first fund called Song, which Nithis helped set up.
Oh yeah, thank you.
My question is just in terms of your deal volume. Are you actually capturing only deals funded in India? Because I was on a workshop 2 weeks ago with Vaibhav in Bangalore. Large discussion around companies going even after their Series A and setting up their domicile as Delaware or Singapore companies, even though their base of operations may be in India. So technically, they're not Indian companies. So I'm just wondering, are you undercounting?
I don't think that'll be captured in the data. The third-party sources that we use wouldn't include that, so I don't believe it. I have to double-check that, but I'm pretty sure that is not included in deal volume.
It's just the point is we see a lot of deal volume going on outside of India. Technically, companies may be domiciled in India.
I actually, as I think about the data source, my guess is some of it they're capturing, and some of it's not as scientific in the way that data's captured. So my guess is some of it is, but the bulk of it is not.
So can I respond a little bit? I think at least some of them you have captured.
Who is speaking?
Vaibhav here.
Okay, he's my partner, by the way.
I hope you know me by now.
Little more than what you know yourself.
Yeah, Vaibhav here, work with Nishit. So, for example, Flipkart is not an Indian company, but has been covered in the deal. And I think what I understand, and I've been following some of the stats also, a lot of those kind of deals which are pure Indian play with foreign thing are covered, but some of them can get missed out because it's very difficult to compile all India-based investment. There is no easy way to do it. So to answer your question, I think about 90% of their deals should be covered, and what I understand of how I see the market, but maybe 10%.
Yeah, I think the big ones definitely are. I just don't know the really small ones, the quality of the coverage on that. But
On behalf of everybody, I'm talking.
My question about the exits, you showed some nicely increasing exits. Do you have a sense of what proportion of actual entries that is? I mean, in terms of how many investments?
yeah, going backwards. You know what? We probably have that data. I don't know. You're saying tracking back to how long did it take to exit on those deals? Is
no,
that
not
the question?
necessarily. What percentage of the investments made? 184 exits or 184.
I don't have that data on my fingertips. My guess is we do have that, and it's still a small portion because you have to go. You do the cumulative number of deals over the last 7 years. So there's no way, even with the ramp in 2014, that you'd have more than 20 to 30% of deals invested in the last 5 years exited in the last 2.
Before you ask, we also have quite a few people on phone, if at all you have any question, because we have also given that facility. So if anybody on the phone wants to ask a question, otherwise we can go to Mr. Mota. But okay, so please go ahead, introduce yourself.
Hi, this is Manoj Mota from Banyan Resources. I operate an asset management and asset development management firm out of Bombay, India. My question is, have you broken up the real estate piece into various segments? Is it annuity assets or is it just redemption assets?
We have. I'm pretty sure we've not done that. So I unfortunately I don't know the answer to your question.
Thanks.
Yep. Any more questions, comments? I think your explanation was very clear, so we left no ambiguity, so no questions. And with that, let's close this session.
Great.
But you've
Thank
been
you.
wonderful, and thank you so much. Really appreciate it, Vandana. May I just offer you a small token? Okay. Also, we have a book. Okay, thank you. Yeah. Very nice service. Thank you so much. I really appreciate it. You may, I think, better ladies first, right? Go ahead.
Thank you.